I think the starting point for me today is NextDC. All of us believe NextDC has a great future, but at the moment it's come off the boil. And so the question is this a buying opportunity for someone who doesn't have exposure to NextDC at a time when there are others coming into the market and we don't know who NVIDIA wants to play ball with and all that sort of stuff. So really, let's kick off with NextDC. What's your long-term view and your short-term view?
Short term, who knows short term? I mean, when you say you find it hard to pick companies, I think it should actually be easy because at least 60-70% of this market is not performing.
Yeah.
It's a very small percentage that is performing. And this market would be very, very frustrating for very, very many people who like to look at their portfolio every day.
Yeah.
I mean, as I've said a couple of times, I bought NextDC, I think from memory, $3 or $4 worth of shares. So I'm sitting on large profit, but I still think this is a share price that will ultimately get close to $20. Bond yields, of course, have an influence. The whole sentiment around AI and the build out of AI, there's a lot of negative sentiment. Australia should have enough power, energy to
clean water,
all of it. I mean, and they are the prime representative on the stock exchange, the largest one. I think it's great value here. Can the share price go lower? Yes. Can the AI story at some stage come on stock? Yes, it can. I mean, but that doesn't necessarily mean that we will have immediate overcapacity in data centers. People forget also data centers are very local. I mean, the fact that we might have an overcapacity in Germany or in the US at some point is not necessarily going to reverberate locally. Having said so, there's no shortage in new data centers being built, including locally. But at the moment, the demand is so strong that you almost have to question whether if this trips over at some stage this year, whether it'll be more of a sentiment-driven trip than as a fundamental one. So I'm personally thinking they still have years to go for them. And most people don't understand the stock because they think it's a technology stock, which it isn't. It's infrastructure, and it's not profitable. And actually, the share price goes up when the losses, accountancy, grow larger. And for a lot of people, that doesn't make sense. But you have to understand infrastructure investment here. So costs come first, rewards come later.
And the important point is, it's not easy to find a big factory space, then load it up with a whole bunch of servers and have the capacity to keep it cool, at the same time get the energy and all that sort of stuff. So it's all very well that there's competition for this, but it's not easy even to find the space.
As what is Goodman is experiencing as well. They luckily have the land. And they have the security of the power. But a lot of companies don't have it. This is what makes Goodman Group such a great developer.
What's your view on NextDC?
I think NextDC is in the value territory, Pete. Remember, I agree with Rudy. NextDC's been around a long time. It's not just about AI. It's been building data centers now for a long time, and its current phase of rollout is decisions it took 12, 18 months ago. The challenge for NextDC is that A, there's a lot of people coming into the space, which Rudy alluded to. B, it has to borrow a lot of money, just raise it in bigger debt, fundraising, and it's issued a lot of capital. So it's done 2 or 3 equity raisings in the last 2 or 3 years, right? Each time. That supply just kind of kills the price. So I think it's in buy zone. I think you're going to have to be patient because there's no immediate sort of, apart from sentiment, there's no immediate thing to take the price higher. Now, it could be we all get really excited about data centers and Firmus comes or something and everyone gets crazily valuations and NextDC goes up with it. But of the 2 local providers you want to back, I would say one is Goodman Group, the other one is NextDC. I think they're a tier 1 operator and they've proven in their build out so far. They know how to do it. They've done it on time, largely on budget. They'll get there. So at $13.30, it's in the buy zone. Doesn't mean it won't go down to $12.50 in 2 weeks' time. I just don't think you're just going to have to put it away and be patient. That would be my view on NextDC.
Okay, so it's an infrastructure play, lots of potential. I must admit, I think even if the AI thing is overhyped short term. I think long term, it's a very, very big story for both business and ultimately for stock markets. I agree with you guys. Let's go to PME now, Pro Medicus, and I've been sort of asking, imploring, when are they going to stop selling this stock? And they have done in recent time. Fantastic bounce back. Is it too late, Rudy, to jump on the Pro Medicus comeback story?
I think not, but the obvious observation to make, $100 ago, it was a better buy. I mean, but it's easier said in hindsight. I mean, I've said, and I'm not the only one saying this, if value investors will never appreciate this stock because you pay up for quality. When you look for quality and growth, this is probably, if it's not the highest quality we have, it's one of the highest quality growth stocks we have.
Yeah.
Now, you can debate until the cows come home, how much do you pay for that? But the bottom line for me is, they still only have a relatively small market share. There's still much more to go. They can still go into adjacent markets and and they will continue to renew those contracts they have. And any indications we've had from the year past, new contracts come with more services, higher price. So the growth outlook is still very strong for Medicus, and they are the number one with. Technology-wise, they are the number one, the bee's knees in that sector, and they obviously use that edge they have to increase their market share, get new contracts.
Are the analysts on FN Arena in support of what you're saying?
I think the average or the consensus target price is double digits above today's. I think by memory 225. What is it now? 200-ish. So and that's obviously that's just for the time being. You don't know where the new contracts come through and everything. I mean, those people looking for it to return to where it was, that might take a while, but from here onwards, that shouldn't matter. The way forward is from here onwards, not from where it was.
It looks like the first two stocks I brought up, namely NextDC and Pro Medicus, is kind of like the new age blue chip stocks you'd have in a portfolio, and not necessarily expect you're going to shoot the lights out overnight, but over time, you'll pop champagne one day and say, gee, I'm glad I bought that.
I was about to say also, there's an AI theme there.
Yeah.
We haven't even seen AI kicking in for Pro Medicus, but it will at some stage.
Yeah, without a doubt. Paul?
100% agree with Rudy. I mean, I bought the history. We saw the graph a minute ago. Pro Medicus got to about 350. It came all the way down to 110, and now it's back at just under $200 a day. I got in too early. I targeted. I bought about 180, then watched it go to 110 and said, how stupid am I? But it's come back almost as hard. So look, this is pick your level here, but don't be too choosy, because this is, it reminds me of a little different industry, well, not healthcare in a way, but very different to the business of ResMed. But it reminds me a bit of ResMed about 5 or 6 years ago, when everyone said that was a stock that was an $8 stock.
Technology competitive.
Yeah, it was the leader in its field. Pro Medicus is a leader in its field. It's only just testing the US market. It hasn't even gone into Europe. What people forget about this is the sales cycle time is about 2 years, and then implementation's another year to 2 years. So it takes a long time. So to think that one of the reasons it came down, it got caught up sort of in the SaaS thing. SaaS is not going to replace healthcare overnight, right? Healthcare is going to be the least impacted, because people are going to be the most concerned about making sure that it's accuracy, let alone the fact that the institutions and hospitals it's selling to, the sales cycle is so long. So maybe longer term there's a risk, but look, this has got years of runway ahead of it. It hasn't even touched. So pick a level, but is that the bottom? I don't know. But I think 180-ish is probably would be my buy level at the moment, but don't be too greedy.
Yeah. It seems to me, I just can't imagine some cool young man in a skivvy from Silicon Valley is going to win over a hospital board.
No.
So Pro Medicus is in there. And they won over the university hospitals first, didn't they? Which would probably the harder groups to actually impress. Yeah,
and that's why they sign 10-year contracts, because it does take so long to sell, and it does take so long to implement, right? So this is, and the other thing, it hasn't even touched Europe.
No.
It's only focusing on the US. The European market is as big as the American market, essentially, right?
Yeah.
So, it's got a lot of runway, and it is the next, it's just sort of it is the blue chip or the future blue chip of Australian healthcare, right?
Yeah.
That's
Okay.
my view.
Let's go to the next one. And this is, I guess, the blue chip of the lithium players in Australia. But we know lithium has, really shot the lights out. Now it's starting to come back. And the question is, is this a stock, namely PLS, or we used to call it Pilbara Minerals, didn't we, before? So is this a buy where it is now, or do we wait a bit longer? Rudy?
Anyone's guess.
Do not say it's a piece of string.
I've-
How long is
I've-
a piece of string? I don't like
Exactly.
that answer.
I don't feel very qualified to make solid predictions about essentially a niche commodities market like lithium.
Yeah.
I mean,
But it is
it's
the
in
energy of
favor
the
one
future,
day,
isn't
and
it?
yes, but it's a commodity.
Yeah.
I mean, and I know. I mean, I've had times when people started arguing with me. It's not. It's a chemical. And I go like, yeah, you watch the difference. I mean, there is no difference. I mean, they are commodities.
And there's a lot of it, right?
And
There's no shortage of lithium, right? In its oxidized or...
And the problem with commodities is that you can still have a long-term fantastic future, but in the short term you can go bankrupt. And that just remains. So for me, this is for people who have they're either better at it than I am, or they have a higher risk appetite. For me, this is, I mean, I have no confidence unless when it's really, really down and cheap and everything.
Like at 154.
Exactly. The best time to buy commodities is when they're really on their knees and everyone hates them. But that's at the moment not the point. There's still a lively discussion going on amongst analysts what actually is happening in lithium. I mean, there's still enough analysts saying, listen, it still looks good on a medium-term prospect, but short-term it's negative. So you have to take that view, because otherwise you can't possibly go in there. But I'm with you. If I were to go into these niche commodity markets, I would go for the higher quality ones and not for the more speculative ones, because the more speculative ones, yes, when the sun shines they go up higher, but when the clouds come, they go deeper as well.
Yeah, it reminds me of Boss Energy. Okay, everyone thought it was an alternative to Paladin, didn't they? All right, so Paul, what's your view on PLS?
Look, normally Rudy and I don't agree on much, but I'm happy to agree with him largely today. It's been in no man's territory for me. The history of lithium was up at about $5 or $6 a price. It went down to a low $1 or something, or very low dollar. And now it went up to about $6.50 and it's back to $4.50. And what scares me about lithium, everyone understands the projections, the bullish forecasts, electric vehicles are going to take over, and then we'll go to something else, and there's going to be everyone can see that gets to the demand picture, right? Supply picture is always trickier, because what we find with commodities is eventually supply meets demand. It's a fundamental principle from Economics 101. And secondly, the other problem we have is it's a slightly controlled market. So it's not actually a free market. This is very heavily influenced by what the Chinese are doing, right? Yeah. And they largely control the price. And so that's why it's so hard for anyone to predict what the price with any confidence is. So I'm sort of $4.50-ish, having seen it down at the dollar low, $1.20 or something, and seen it up at $6. It's sort of, for me, nowhere. I don't really want to touch it at these levels. I'm not saying it's going down, but I don't feel I have to own lithium at this price. But come back to Rudy, if you're going to buy lithium stock for a trade, stick to the quality. PLS, or this is a PLS group, I think it's now its proper name, is the quality stock of the lithium producers.
Yeah. And I guess there are a lot of positive forces, like EVs are becoming more popular since the Iran war.
Yes, but also technology can change quite quickly as well. There's already a lot of chatter about different technologies.
Like a hydrogen alternative. But wouldn't that imply that the cars themselves would have to be different, or because a hydrogen battery I think is smaller.
Yeah. But there's also salt batteries as well, and so the best example probably is that if you would have asked me a year ago what's going to happen with aluminium, all the analysts were absolutely black, and now they're all changing their.
And don't look. As I said, don't listen to the stuff. Lithium is not in short supply. It's one of the most common.
I mean, it's available.
Materials around, right? In different,
it's raw stuff.
It's oxidized, and you got to extract it, right? That's the issue, and get it down to us taking it out is where the cost is. but it's not rare, and it won't be hard to find other, successful deposits, right? Or places that you can extract it.
Well, you did make me think that water is also in big supply, but you try buying a litre of water and what you're going to pay for it nowadays. Anyway,
they pay more than for oil.
Yeah, exactly. So the bottom line is this. In a market sell-off, if PLS got around $2, it probably would be in the buy zone. What do you think, Rudy? I put you on the spot.
Depending what the reason is and what happens to the lithium price, but yes.
If it's not a great recession.
I think, Pete, having said it, I think under 3 I'd be seriously having a good look at it, because I've seen enough of it over the last 5 to 10 years to know where it is going to trade.
Yeah.
But I just, at the moment, on that chart we put up, it does look like there's a bit of sort of support around this sort of 450-ish type area, and maybe it goes higher, but I just don't feel I need to own it at these levels.
I think LTR Liontown's about $1.50 or something, and Jenna Reinhardt paid $3 to and chase Albemarle out, and they want to pay $3. So at one stage, someone thought this company was worth a lot more than it is today. And I know I actually had a potential financial planning client come in who had, he's an electrician, and he had $5 million in his super. How? Well, his son worked at Sydney Uni. He came home one day and said, Dad, I think this thing called lithium is going to do really well. So they went into PLS, Pilbara, and made a fortune. When they came to me, I said, maybe you should take some profit and go into something defensive. They didn't come on as a client.
Yeah.
They lost a lot of money too.
Yes.
But they're probably making a bit of a comeback now. That's good to hear.
I've heard worse stories than that, by the way.
Yeah, I bet you have. All right, let's go to this one. This is really interesting. BHP clearly, went over 60, 63 or 64, didn't it, Paul? And it's around about 58 or something like that.
56 or whatever.
Yeah, even 56. Is it a buy here? On the supposition that if the Iran war is over and we get a bit of a global economic comeback, I know a lot of really smart people like David Paradise, who I've interviewed recently. He thinks materials have a good outlook, and so BHP would be a beneficiary. What's your view on BHP, given where the price has been, where it is now?
I think it's a copper story.
Yep.
And just about every analyst and his cat and his neighbor's cat and the nephews, they're all convinced that copper is still looking towards a deficit.
Yeah.
Demand for copper is
because of the AI thing. That's what David said.
That's the cherry on the cake.
Linked to AI.
That's the cherry on the cake. Yes. BHP, many people might not realize it's the largest copper producer in the world. More than half of its profits will be from copper.
Yep.
And that will only increase if current forecasts are for iron ore to steadily decline over the years ahead. Copper will go up. They have some problems with the yens and potash, but and obviously nickel is not really a major force anymore there.
They even sell a bit of coal to India as well, don't they?
It's increasingly becoming a copper story. So if you believe in the copper story
and the AI story,
and you get the big giant here, which is more diversified and all of that, so it's not gonna do your usual small cap mining stock thing. Then you can almost make an argument, bottom drawer in the portfolio and don't look at it.
Yeah. It was much better value at 35. But
I remember 13.
Yeah, so okay, Paul.
Yeah, I think BHP is probably your core portfolio stock. So just what I mean by that is, index weighting for BHP at the moment is about 11%. So within your portfolio, I don't have quite enough. BHP should be about 11%. That's just being index weight. That's not being overweight. So a lot of clients won't be in that situation, right? They'd have probably more in banks.
Yeah.
So has it gone up too fast? Yes. Because we really liked it under 40. When it got to 50, we thought, this is probably you take profits, and then it pulled back a fraction, and then next minute it was up at 60 and it pulled back a fraction, next minute it's up at 65. Probably a little bit on the pricey side at the moment, but I think if you portfolio buying long term will be good at these levels. And so if you're up below weight, I think you need to get up to weight. And, I may be looking for a little bit just more of a pullback, but I wouldn't be mucking around too much.
It's also helped like CBAs with the ETF buying, isn't it? Because if someone slams $10,000 into an ETF, there's a big chunk of that's going to go into BHP and CBA, and that helps their share price.
Yeah, I mean, I think, and also if you have taken profits, you are trying to trade it, great, but just be careful. You got to reset your level. I think the long-term trend here is in place. This is, it's got a couple of problems. It's got a few problems, the strikes in the Pilbara. Potash just continues to be an ongoing bit of a disaster.
They will probably have to spend more money on capex as well. It is not a free for all, only positive story.
Yeah, no.
But you have to take it as a conglomerate view with it. I mean,
it's still on multiples. It's still not too bad. Like it's high historically, but it's not that bad compared to some other parts of the market. So, I think there's a fair. At least good thing about BHP, apart from potash, which is decades old story, right? It has been very disciplined with its capital, and yet so far, under the last 10 years or so, hasn't made any major acquisitions, or not too many major acquisitions. It hasn't got it wrong. So that's the trouble with mining companies. Price goes up and suddenly they've got to buy something else, or they take over Rio or do something really stupid like that. Fortunately, it didn't do that, right? Or no, Anglo, the whole thing with Anglo was a disaster in the making, right? So fortunately, hasn't done any of those things yet. So that's why I think you can be reasonably confident. It is discipline. And that's why I still think it's a key portfolio stock.
So we've got 3 ticks out of 4.
Maybe something to add as well. I would prefer BHP above Rio.
Yeah,
it has been the superior performer. Maybe not necessarily always in the share price, but operationally, yes. Because analysts are now looking at Rio to copy what BHP has been doing. Is made smart asset sales, smart contracts, like how they sold their silver production, for example. They're probably looking to do the same thing with gold. Very smart operator. I mean, the lowest cost production in the Pilbara. The other companies are a little bit jealous, including Rio.
Jealousy. Yeah. Now, I put Bravura Solutions because I always love the way you pronounce it, Rudy. And you were one of the first experts to bring it up many years ago. And it's had a good report last week. What's your current view on Bravura? Explain to our viewers what it does.
It basically does software for finance service providers. It's a small cap.
It's got a European.
It's a very much European angle to it. Yes, it has gone through some tough times. But small caps. I mean, so you have to be one customer, 2 customers. It can make such a big difference. We saw recently the same thing with another small cap company that which traditionally be highly regarded, Objective Corp. One customer says we're not renewing the contract, and the share price is down by 40%. So you have to take the fact into account that this is not Technology One, for example. This is smaller, higher risk profile. I know that a lot of analysts they like it, also because it's supposedly staging a turnaround.
Speculative play?
It's more speculative than normally what I have in my portfolio, yes. I'm the one who I would prefer Technology One any day over Bravura.
But I remember you when you were outlandish and exotic and outside the square, but now you're becoming a conservative, wise investor. Well done, Rudy.
We are also in a share market that is extremely polarized, and it punishes immediately. And we should all be cognizant of the fact that volatility has steadily picked up over the past 2.5 years. I don't expect it to be any different in August. So you have to be careful what you own, and better have some cash, I think, because if any of your holdings dares to disappoint, don't be surprised if it's 15-20% off.
And the important point also should be thrown in that we've got reporting season starting in the US.
Yes,
and if the big companies, the big one, the Magnificent Seven and the other hyperscalers who've invested in AI, if they don't show really good reports, Wall Street could do a pullback that we'll all be affected by.
I actually think the dynamics are a little bit different. I think they've performed so well, and part of the reason why the American market is where it is they've constantly upgraded the forecast.
Yeah.
I think the litmus test in the US will be, they will probably perform very, very well.
Yeah.
But then the question is it in the share price or not?
Yeah.
We have the opposite. We are downgrading. And the question for us is the bad news all on the share price now? Is it out? Or is there still more to come in August?
What do you think?
There's still more to come in August.
Yeah.
So I'm a little bit more cautious.
Yeah. Okay. Paul?
Well, I agree with Rudy's point that he's always cautious, right? I thought I'd say that.
He's given up his exotic buyings, hasn't he?
But look, coming back, two things. Yeah, I mean, look, I think the trouble with our market is the economic settings aren't right at the moment. You know, we've got a pretty subdued economy. We've got high taxes. We've got high wage growth. We've got very low productivity.
Aggressive RBA.
Aggressive RBA. If it wasn't for the mining boom, it's not really a mining boom. If it wasn't for our mining exports, people on the East Coast might be thinking life's not as fun, right?
Yeah.
Because it really is what's supporting this 1% or 1.5% growth. It's mining,
And also
a little bit of data centers,
government spending on infrastructure as well.
Yeah, so we have a very different economic environment. You like or loathe him, President Trump, but the American environment is quite different, and we haven't got it here. So we haven't got a particularly. I'm not trying to be political, but we haven't got a particularly. Government's not concerned about the economy, right?
They're not concerned about the business and the investing side.
They're not concerned.
They're looking
about
after
how to grow,
consumers through tax cuts and stuff, but we're not getting productivity. That's the problem.
So look, I'm not sure all the bad news is out, but I do agree with Rudy. The risk is, on our market is how much more. The risk is all the bad news is out. In fact, a little bit of good news could turn it around and instead of rally. And I agree with the reverse on the US. Coming back to Bravura, for me, it's a pass. I don't see why I need to own it. It's a small cap, and look, just to give you an example, it reported on, did an upgrade of guidance on Friday. It rallied 15%. Most of it came out of cost cutting. Today it's off 7%. So, but it's still trading,
Such a nasty market.
Well, it's such a nasty market, right? So,
there's no lasting momentum.
It wasn't a revenue upgrade. It was basically a cost cutting upgrade. So that's the trouble with the small cap. You've got to show, I think in this market, you've got to be able to show revenue growth in addition to earnings growth. So I don't think, I'm not bearish on the company. I just don't think I need to own it. And I don't think there's any catalyst for suddenly the market's going to say, I love Bravura.
No, I totally agree. Okay, let's go to an interesting one. And this is not really in your excitement machine type portfolio. That's a Magellan's Infrastructure Fund, MICH, which has been a nice performer.
Exactly. Now you are getting me excited. I think we can discuss Magellan and the merger with Barrenjoey and all of that. But I think if Magellan has done one good thing, it has tried to inject into Australian investors' mind the importance of having access to infrastructure.
Yeah, and it's done well. Yeah.
And that part they've done really, really well. And I do remember years and years and years ago they would travel the country and they would try to convince people that having infrastructure access, global infrastructure, is actually a good thing. It performs through the cycle, higher interest rate, low interest rates, if you do it well. The added comment here, of course, is that gradually over the years we're having less and less on the ASX.
Yeah,
I mean, it's
because AMP used to have a big infrastructure.
But it's also the individual ones. We no longer have any airports on the stock exchange. I mean, toll roads. There's only one left, I think. Then it becomes APA, yes, but everyone owns APA, I'm guessing. And then the Cube is about to disappear. I see now analysts putting forward the likes of Infratil, I mean, but as infrastructure. So we don't have that much infrastructure, and I can definitely see the point, if you have a diversified portfolio, to have infrastructure in there.
Paul, explain why the...
so I'll explain just on that chart. The recent price drop is just a function of, it's a trust, and of course, like all trusts, they have to distribute all their income. So Magellan Infrastructure is currency hedged. It's had good currency profits during the year. It crystallises the gain. Come the end of the year, it has to distribute. So it's got a supercharged distribution, which went X on the 30th of June. that's responsible for the price drop. It doesn't affect performance what you own as a get, because you just get the distribution back, but that's the share price that affects the share price. Look, I quite like Magellan Infrastructure. A lot of our clients have it. I like what Rudy says. They've done a lot to promote infrastructure. The advantage of this fund, it's actively managed. It's also currency hedged. It's got quite a good portfolio. Unfortunately, you can get all that through a couple of index funds. And I have to say they've done even better than Magellan, not just over the last year, but over the last.
No noticeable.
So probably the one I'd go for is the iShares Global Infrastructure Fund. It uses a similar index it benchmarks against. It's done even better than Magellan. So, you can read about this in a very brilliant piece that I wrote today in the Switzer report. So
you'll have to be a subscriber, but it's really worth subscribing.
And so look, probably GLIN, that's the one from iShares, is the one to look at. There is another active fund which is from Argo, so Argo Listed Infrastructure. That's actually a listed investment company. That's actually performed a bit better than Magellan, but it's not currency hedged, and has some of the issues with listed investment companies. So,
and what kind of, for those people who've never ever thought about, what kind of yield do you expect?
Look, you don't. Probably the yield is about 4%. It's not huge because most of the investment is occurring in the US and Europe, and typically there'll be a little bit of capital appreciation of the price. And there'll be a pretty steady infrastructure. But one of the reasons you invest in infrastructure, there's a couple of reasons. It is defensive. It does provide a reasonable income return, not huge, but 4 to 5% typically, which should increase over time because a lot of the things like airports and toll roads, they have inflation protection, so that where they can increase their prices, and also. From a correlation point of view, it's not that well correlated to equities and bonds. So it's actually quite quite a diversification streak. So there are a lot of good reasons to own infrastructure. The major problem with infrastructure is it is interest rate sensitive. So and interest rates, if they keep on going up, they'll hurt them. They'll hurt them. So it actually, if you understand this, one of the best performing asset classes last year. So almost 17% if you're currency hedged, right? So it did a lot better than Australian equities by investing in infrastructure.
Yeah, it's one of the reasons why I wanted to bring it up. This performance was quite good. Now, the next one I want to do is a really interesting one. Semi.
That's for people who like to go to the races.
Yeah, SEMI. Now, we had a client.
This is semiconductors, right? This is an ETF.
This is an ETF for semiconductors, and semiconductors is everything in the AI world. Like, I've been doing a lot more reading because I'm fascinated by it, primarily because I've been watching a TV show on Netflix called Person of Interest. Have you seen it, Rudy?
No.
It is sensational.
Okay.
It was recorded around 2012, 2013, and it's all about AI. AI, the machine. And of course, the machine is basically Claude. And so this got me fascinated from a viewing.
So this recorded in 2013.
Yeah,
I know.
So they're well ahead.
They were very early.
Very early, right?
It's actually written by John Nolan, who did Westworld. So he's already in the sci-fi. But seriously, you start watching this, you say, hell, this is what could go on, because they've taken it to the worst possible situation where the AI machine is really doing scary things. But it's a really good show, and it's made me do a lot more reading about, GPUs and chips and all that sort of stuff. So Semi is a ETF that's captured. Now, it's up 122%.
We should have a look at the graph if we can. Hopefully we can see that. So you can just see how volatile it is.
Similarities with the rocket.
But see, you can see the reason why I want to bring it, it's come off the boil. And I've got to say, one of our financial planning guys, I told him to get out of it at the top, and he said, nah. He stayed in, but still it's only dropped about 7 or 8%. It's up 122%. So I guess this is a fantastic portrayal of the AI story, isn't it? In 1 year. Paul, you're obviously across it. What do you think about this? You going to buy into a Semi at this level?
Probably not. That's probably kind of a bit too cautious. I mean, this is obviously, this is an international ETF. It trades in Australia, but it's obviously tracking all the big, Taiwan Semiconductor, AMD.
Hynix.
Hynix?
Samsung.
Samsung, all those. So,
and Samsung.
and this has been the bit of weakness in the US market the last couple of weeks has been largely because they've been selling semiconductors, and so
They're taking profit too.
taking
aren't they?
profit. This is why our market this has come down. So, look, I guess you've got to say that on that chart the trend is still up. You know, it hasn't broken. So at some level you get back in again. I just don't know how I have any insight, Pete, apart from
No.
you know what's going on in the US.
Well, because of my TV show, I've got even more excited about the future of AI. But I do know when you get big rises like that, there's profit taking. But it seems to me, I want to alert people that if there is a big pullback, if this thing drops, down by another $8 or so, it probably would be in the buy zone. But Rudy, let's go back to you for a wise old owl's view on this one.
What you guys don't know is that when I was in the Netherlands, this is what I used to do.
Oh,
ASML and the likes.
Is
Because
it?
they were all Philips shoot-offs.
well, of course, yeah.
And the funny thing is, just at a personal level, when I left the Netherlands, Philips was one of the largest companies in the Netherlands, and now it's ASML. So now the offshoot has completely overshadowed the mothership.
Yeah, yeah.
For people who don't know, they should research ASML. It's exceptional story.
Yeah.
And they are very, very much at the forefront of this. When it comes to this type of hardware, it's traditionally extremely cyclical, like extremely cyclical. Companies literally go bust at the bottom and become billionaires at the top. I mean, it's even more cyclical than mining.
Yeah.
But what you have to believe now is that this whole AI investment story, which still has legs, is at this point in time completely reshaping this industry. So if you look at that chart, I mean, I think the easiest way to interpret it is this is how we humans work. Yeah, we all like to be part of the winning story, and we just push it too far, and then it has to come down. Right? Now, how far is too far, and how far does it have to come down? That's anyone's guess.
Yeah.
I mean, so we're now. This is no longer just following fundamentals. There's a lot of market sentiment, momentum, everything is in there. Yeah. So while I'm very hesitant to play this through lithium, because I think I have a more better understanding of this part of it.
Yeah.
So I would basically be in there if I were in the US, and I might be just like your financial planner. I might not be too worried about the pullbacks because I continue to believe that the upside is there.
Yeah.
If it sometimes pulls back by 20, 30%, you just have to take it on the chin. I mean, because you're not going to be smart enough, I think.
Yeah.
And the risk is, if you're trying to be too smart, then you might be selling at the right time, but then it runs away from you again, and you're not. And then the psychological factor kicks in. You're not getting on board again. Yeah. I think probably one way to do this is don't make it too important in your portfolio.
Yeah.
So if
Good
it then
point.
drops, it doesn't kill off the whole portfolio.
Yeah.
But I would argue if you are an AI believer, and in a diversified portfolio, you would have a little bit of everything.
Yeah.
I mean, you have the current losers who might recover, and you have also the current winners who may not necessarily run all the time every single day, but that the combination of the two.
I
that's your
remember
diversification, I think.
the legendary US fund manager Bill Miller saying when he was asked about Bitcoin, he said, "Oh, yeah, I believe in Bitcoin." He said, "Well, I have maybe 1% in my portfolio, but 1% of probably a $500 billion fund. But still, that's the point." And I think semiconductors are probably worth at least 5% in your portfolio because they are really, really over the future.
I agree. I agree with Rudy on this one. Yeah, I mean, they're not going away.
No.
It's like valuation. How do you know what the value is? Because you can see the demand curve, but you just don't know. We know that, setting up plants to produce chips takes years, cost
and billions.
trillions or billions of dollars to do.
Yeah.
It's not easy. I mean, that's what, one of the first thing that Trump did in 2025 was try to get some investment to build a chip plant in the US, right?
Yeah.
I don't think.
TSMC is the only one, I think.
So it's.
In fact, Paul, there was an interview on CNBC in the weekend where the CEO of SK Group is saying they're looking at one in Indiana as a possibility. But he said, we're going to build these all around the world.
Yeah.
All right, guys. Well, thanks very much for your involvement, your answers, and getting on